Welcome to this tutorial on trending engulfing candlestick patterns and strategies. This will work for bullish or bearish engulfing candlesticks. Now, what I want to share with you first of all is that quite often engulfing patterns are taught as reversal patterns to put in highs and lows. I'm going to show you a little variation of that today. So here's your typical engulfing pattern that people would look for. Something like this here, it's a two-bar pattern, right? And different people will define it a little differently, and that's okay. The way I prefer to do it is to look for the real body, in this case of the green bar, to engulf the real body of the red bar. So the real body is the colored part. Because if you look at the high and the low, and some people will do that. They'll say, no, the green bar, the high has to go above the high of the red bar, and the low of the green bar has to go below the low of the red bar. And that's okay. That's acceptable. I understand where they're coming from. Personally, for me, it's just the real bodies, again, which is the colored part. And there's a few statistical other things there, such as the range of the bars is very, very important. But for today, we're not actually talking about this type of pattern, but that's how they are typically taught, is to find swing highs, swing lows, more like a reversal pattern. And that's okay. That is one valid use of them for sure. Today, I want to show you a different use, and that is for trending markets. Basically, one of the challenges people have is they say, well, how do I know if a market's going to trend, continue the trend, or if it's going to reverse? So let's look up here. So we've got this market. It's kind of just meandering sideways here for a while. Okay, moves down, boom, comes back up. So this is the key here, is this is the beginning of a new trend, all right? This whole zone in here is just a sideways market. In fact, we could even extend that out to here if we wanted to. Let's see how well that's going to do for me. No, actually, let's just do it to right there. Now, we have this channel. We're moving sideways. And we don't put in a lower low here, but we do put in a lower high. So this would be the very beginning of a potential downtrend with that lower high right there. So awesome. Now, here's the challenge. Normally, people like to see both a lower low and then a lower high. And we don't really get that, right? These lows here are all coming in about the same place. That's actually awesome, because that means you're about to get in early, probably earlier than most people. This is what I call trading inside of consolidation. Again, let me draw this up here. So we are literally trading inside this consolidation area if we're going to go short there. And that's exactly what we're going to do. So most people wait for the breakout below the low of this range. And that's okay too. That's valid. But one of the hallmarks of professional trading is we get in before the amateurs. So the earlier you get in, the bigger reward you have. Because if you get in later, well, you've left all that money behind you in the rearview mirror, so to say. So how can we get in before the amateurs? We got to get some sort of signal that they may not be looking at. So what we're going to look at is an engulfing pattern to show us a continuation in a new trend. But again, it's not occurring at a low. So for example, it's not a big swing low, like boom, way down there, and then way up there. And here's our little engulfing pattern is right there. It's not the kind of thing we're looking at here. Instead, we're going to mix it up a little bit, and we're going to look for it inside of this consolidation zone, right? Again, inside of that zone right there. And there's our little engulfing pattern. Now, it's not your typical engulfing pattern because, again, the typical engulfing pattern is a two-bar pattern, right? So just like down here, that's just, whoops, I actually am including 3 bars there unintentionally. So typically an engulfing pattern is two-bar pattern, right? That's fine, that's traditional. That's not what we're looking for here. For trend continuation, we're looking for to engulf more than 2 bars. So let's look at this, and we're looking at that red bar right there. How many does it engulf? Well, it engulfs that one. 1, 2, 3, 4, 5, 6. Wow, it engulfs 6 bars. Again, looking at the real bodies of the bars, the colored part, the green or the red. So that's what's significant here. That's what's significant. That's what's telling us that, oh, awesome. So this thing, this puppy is picking up some steam here, right? We've got to move down. Again, within that channel, I'll put that channel back on here so you can see that. I keep removing it. I'm just trying to create clarity for the actual bars we're looking at. I'll just throw it over there. What the heck? So we got our big move down. It's not really a big move down at all. Actually, it's still within consolidation. That's the point. We get our little retrace up. I don't want to draw over that for you. But then this bar here, first of all, lower high. Okay, it doesn't get back up here to the top of the range. So that's part of it as well. That's part of the setup. We don't get strength moving back up. So we get some strength moving down to the top of the or bottom of the range, but it's still within the range. Then weakness up. That's step one. That's your first clue. We get some narrow range bars with regard to look how narrow range the real bodies are, the green and the red parts. Now we get a big one that the open is up here, the close is down here, and it covers the previous, again, 6 bars. Engulfs them all in one, all at one time frame, whether it's a daily chart, a weekly chart, a monthly chart, a 2-minute chart, whatever. You got one bar that has now reversed. Think of it this way. It is wiping out the price action of the 6 previous bars all in one bar. All in one bar. That's a lot of energy built into just one time interval, one time frame. That's reversing the last 6. Okay, actually reversing the last 5 here because the first bar was red. But that was still, within the zone and before we had a lower high. So that's what I call a trending engulfing pattern as opposed to a reversal. And that's what can help us get into, first of all, these breakouts. So we've got a little just sideways channel here. How do we get into these breakouts before they break out? Well, maybe we could look to enter here, or we could get in, down here below the low of that bar, or maybe below the low of that bar, wait for a little consolidation here. That's fine, except as professionals, we want to get in earlier than everybody else. That's called trading within consolidation. And that is not done by most people. That's professional level trading. This is more advanced, but it is very, very powerful. Wouldn't you rather be in earlier than later? And by the way, now what are you paying for your trade? You're getting in at a price that is wholesale. If you wait for the price to move too far, well, now you're paying retail. Think of it that way also. And your risk is probably going to be less. I mean, the risk on this trade, for example, would, for me, be the range of just that one red bar there. That's it. I would just risk that bar, and I would get in right below the low of that bar, even before we broke out. I would get in on this bar before we broke this low. Oh, yeah. I just get in when we broke the low of that bar. In fact, that's what I do all the time. Took a trade just like this today on crude oil. And the beautiful thing about these is they tend to actually go pretty far. They tend to really, really move. The risk reward on these is pretty darn good. So the risk is small, but my reward's going to be better than, if I got in down here, well, my reward is whatever, wherever you got. If you got in here or whatever, but now my reward is that. So you're going to get a bigger reward, and because your risk is still going to be the same or maybe less, depending on where you put your protective stop, right? If you put your protective stop, if you got in here and you put your stop up there, well, now your risk-reward ratio is really skewed. So to improve our risk-reward ratio, we get in sooner, bigger reward, and the sooner you get into, the less your risk, potentially, as long as you get a good entry like that. So it just improves it on both ends of the risk-reward spectrum, and these contraction patterns like this, they tend to then go into expansion because the market has a cycle of expansion and contraction. So this is what we want to do. I like to scan for these contraction patterns or just visibly watch them and then look for the breakout because they tend to go into an expansion cycle then, which means you get a really big move out of them. That is the norm. narrow range for a while, and then big range for a while, and back to a narrow range for a while, then back to a big range for a while, then back to a narrow range, and it goes back and forth, the ebb and the flow of volatility cycles. So hope you found that helpful. I'm going to do a couple more videos on engulfing patterns as well. This is part 1. So if you are watching this as soon as it's released, well, I'll release the next one next week. And if you're already seeing this after August, let's say 22nd or so, then you'll probably have part 2 already in YouTube, and you can check that out. In fact, just type in top dollar trading, engulfing patterns, and I'm sure it'll come up. We always rank very high. So, and what helps us do that, by the way, before I go any further, I would love for you to get one of my trading courses for free. Actually giving away a trading course right now. It's 5 videos, and it includes one of my favorite trades, the rubber band trade. And this rubber band trade, I'll give you all the rules, the entries, the exits, all that stuff, complete freebie, because I want you to start making some money. So that's what this free trade is designed to help you do, is to start making some money. I love to give value in advance before you buy any courses from me, or even if you don't buy any courses from me. Either way, just take the rubber band trade and hopefully you'll start making some money. Please do paper trade it and then demo test it before you actually start putting real money in it, obviously. But just click that square in the upper right-hand corner of the video, and that'll take you to the page where you can access the entire mini course, which is 5 videos, and the rubber band trade is included in there as well. And if you found this helpful, hey, the thing that really helps me, and the reason I don't accept paid advertising, is because you guys have been so great, and I don't like to have paid ads on my videos, although people have offered thousands of dollars for that. But no, I'd rather that we just keep this free. So it helps me to turn down the paid advertising. It's just you guys sharing it. That's all. You could just share it with others if you felt it was good. Only do it if you honestly feel you're getting value from my videos. If you do, then I would love for you to share good things with good people. Leave a comment. If you have any questions, type them in. Any requests for future videos, type those in the comments below. Give me a thumbs up. And that's it. I'd love to really solve your problems. That's what I'm here to do, is to help solve your trading problems.